I'm going to attempt to clarify what the middle or the median full-time wage earners in America pay for federal, state, and local taxes. Within America here, of course, we have a tax system that we spend billions of hours and billions of dollars and have complete industries dedicated to just trying to figure out what each individual pays for taxes here in America. So when we take a look at the federal side of the tax rate, we have what we call a progressive tax rate, in that what we have here is we have these tax brackets. Again, they're at 10, 12, 22, 24, 32, and 35%. And of course, what you do is you pay for anything that you have as far as a taxable income between $0, $9,000 and $525, you would pay 10% of that. And you can see over here on this side, again, it shows here if you had a taxable income of $38,700, the effective rate you would be paying would be 11.5%. If you had a taxable income of $82,500, it'd be 17, and so on. I didn't show the 32 and 35 because that's really outside our discussion here today. Also, I'm not going to be covering when we talk about high earners. Those are classified here in the single range of 200 to 250 as far as single and joint. And because when you start getting into those ranges there, you have effects of the alternative minimum tax, which is income and deduction based, Medicare surtax, which is based on your wage income, and net investment income, which is the non-wage and non-qualified immunities based. Then also, I did not address the low earner tax brackets and tax breaks and deductions. Those have the earned income credit. Those are based on income, filing status, and family size. Also, the premium tax credit, which is part of the Affordable Care Act, which they classify as Obamacare, and of course that's based on your income and federal poverty line based. So let's take a look here of where this information comes from. So what I used here is I used the Bureau of Labor and Statistics for the median full-time total for men and women, which was $879 per week times the 52 weeks. Then I took that and I also added in just a nominal estimate here for income purposes and demonstration here of interest and dividends. So that gives us a total federal gross income here of $46,208. And of course, just to make it simple, we go with the federal standard deduction here, single deduction, which gives us a federal taxable income of $34,208. So going over to the federal tax bracket and plugging and chugging the numbers, we come up with a federal income tax of $3,914 based on this taxable income. Now, here's where it starts getting a little bit more complicated. We have 50 states and one district, and each of them have their own tax laws and how they set up their brackets. Some have actually no income tax, some have lots. And so you can see here I used an average based on the, I used the smartasset.com online calculator. What you do is you plug that in, you plug in the federal adjusted gross, and it gives you an average. So what I did is I took all of these states, okay, and the District of Columbia. This is what my spreadsheet looks like of going through and calculating all of the property, local, and sales tax. This just to show you of what I went through here to come up with this. But to make the ease of talking about it, here's where I'll be referencing this. So the income tax here, like I said, I used the smartasset.com online calculator, and I used the dollar figures. So those dollar figures that I usually are in here, and the percentages are just strictly based on what you see here as far as the income of the single and the joint. Now this I set up as a data sort where it's based on the joint from lowest to highest, and so that's where the income came from. The yellow highlight you see here is the median, but what I'm using here as far as on the total spread, on the summary spreadsheets, are the average. And so this shows you the average here. Now for the sales tax, which is for state and local together, that came from the Tax Foundation based on what the data that they had here on the 1st of July. Pardon me. And then the property taxes, I used again the Tax Foundation, and this was the last time they went through this data was in 2015. They actually gave a per person, per capita dollar figure associated with that. And so I had to apply an inflation of that of 7.7% to get a value from 2015 to 2018. And you can see down here, again, the percentages that are associated with that. So we'll come back to this sheet to explain it just a little bit more, probably at the end of this discussion here. So that 3.29% you saw was an average that was based across the 50 states and the District of Columbia, and then that's applied to the gross taxable income here. And then also we have payroll taxes. This is where you pay for your Social Security and your Medicare. That actually comes out of your paycheck before you actually get it. And of course, your employer pays the same amount for you. Now, this is kind of interesting in that you are, again, you pay taxes on this, but of course, when you go to draw your Social Security, you may or may not pay taxes. And there is a whole, I found a particular issue paper that was written by Social Security. It's called number 2015-02 of December 2015, which goes through when they changed the law in 1983 that changed where you actually pay taxes now on Social Security to 50% if you make a certain amount of income, or if you then it was changed again in 1993 to 85%. And that paper does an excellent job of showing you the rationale for all of it, and those type of and probably answer almost any questions that you may have concerning that. But what does this mean to the actual median worker here? Okay, so what we have here, we actually have an earned gross of $49,705. That there is what this worker actually earned as far as their pay, because remember, the employer paid this portion for them. Now, okay, so what we go through then is we take a look here and we have the federal payroll tax. Okay, that is these two figures that are added together here. So that takes, again, from the earned gross, you continue on down. Now you're down to 42,000, and that was about 14% of what you actually earned. Then the federal income tax, which came from up here, which was based on your taxable income. And of course that figures out at 7.88% against 49,000. Then the state income tax, again, that just pulls from right up here. Now you're down to what they typically say is your claimed net worth, which again, it doesn't matter if you're pulling it from here or from here. Again, you started off with a paycheck here of $46,208, but now you're really at $37,671. Then using the per capita average property tax associated, that comes up to 3.26% of based on this dollar value up here of 49,000, and so that leaves 36,000. And then when you put in the state and local taxes that you pay, the average across America, then you have your 5.1%, which was really the state tax, and then the local taxes are 1.46%. So out of 49,705 earned, the actual American wage earner really gets 33,686, or really 32.23% of what is earned goes to federal, state, and local taxes. And of course, I did not take into account those taxes that are associated with business taxes. Again, those are passed on into the product. Sin taxes like cigarettes and alcohol, they always throw additional tax on that. Luxury taxes, which are like you're eating out in your restaurants and hotels, which would actually make this percentage even higher if you were to take into consideration all the taxes that are paid. So if you go online, you will see that you typically pay right around 32% is what you'll see from even the Tax Foundation of what the average or the middle American pays for taxes. Okay, so this was for the median full-time wage earner, single. Now let's take a look at what it is for joint. Again, the calculations, again, of course, they just double everything over here for the tax brackets that you have here for the progressive tax brackets. And the dollar figures that I used here are, I should say, income figures. Again, for the median man, it came from the labor statistics, 962 per week. For women, 779. I used a nominal estimate of $1,000 for interest, other income coming in. Because again, everybody has a little interest or dividend of some sort typically that comes in. And so you can see here, goes through the same calculations that was done on the single again, and you can go down through these and see. Then again, it's very close. It's only 0.1% more than what it was for a single. It's 32.33%. And so that, again, right around a third of what you earn actually goes to taxes. Now let's go back here, and as I had talked about before, let's take a look here at our states. And again, I thought this was kind of interesting, where again, like I say, what is set up here, you have the total state taxes associated, where again, you're taking the property, the sales, and the income tax, and then those are added up and brought across here. Now what this shows here is, again, this, like I say, each of these columns here a show for the different items and where they go from lowest to highest based on the joint percentage here. So if you're looking for the state with the lowest taxes overall, Alaska, and as we go right on down here, you can see that again when we get down to the last one here, New York has the highest taxes as far as when it comes to the grand total. Property taxes was District of Columbia, sales tax was Tennessee, and income tax was Oregon. But you have to take these different items into consideration and add them up across the board, because again, as to demonstrate here, Oregon, even though they have the highest income tax, when you take a look at overall taxes, they're only up here in 9th position overall, 9th lowest when it comes to the nation when it comes to overall taxes. So we'll go, I'll scan down here one more time very slowly so you can kind of take a look and see where your state may be with these different columns here, and see where you think you may be or where you may want to move to. Again, but you have to also take in consideration what are the services that you're getting for your taxes. If you like the services that you're getting, of course you have to pay for those, and those will actually all come out of the taxes. Okay. So I hopefully you enjoyed this, and hopefully it clarified a few little items for you, and you have a good day. Thank you.